If your trading screen looks something like this, then you need to stop trading right now. More indicators will not yield to a better strategy. In fact, if anything, less is more. In this video, I will show you an extremely simple pattern that you can trade without any indicators, even without looking at your screen, and it will yield very good results. So how do you trade without indicators and without even looking at your chart? The pattern that I will teach you today uses only 2 days or 3 days close price. Now, this pattern is so powerful, not because of data mining or because I cheated somehow. It is because I know the S&P 500 is a mean reverting instrument. So in fact, any pattern that uses some kind of pullback, it will do well on the S&P 500. It will actually do well on any mean reversion instrument. These are instruments that do very well with mean reversion strategies. And you can test that. Now you can watch my older video where I tested the S&P 500 mean reversion property. The pattern is extremely simple to build in any trading platform. I'm using StrategyQuant X here because of other advantages that we will use later in the video. So for starters, let's build this strategy. I'm using the Algo wizard, so I will just use lower than for X number of bars. So I'll choose that, and I'll choose 3 bars, no shift. That means we are executing today. And the comparison is when the close of today is lower than the close of yesterday. So I'll check this pattern. The close of today lower than the close of yesterday is true for 3 bars. That means I am looking for 3 consecutive lower closes. So this is a very nice trick, and it is available in many trading platforms. It's like count if, where you are usually in one sentence, you are telling the computer that look for 3 close down in a row. This is not the close below the open. This is the close lower than yesterday close, and yesterday close lower than the day before and the one before that. So it's a pattern. It's a 3-day low close pattern. This pattern, of course, could be extended 1, 2, 3, 5, 7 bars. It doesn't matter. And to exit, I will use the opposite pattern. So in my long exit signal, again, look for comparisons and greater for X number of bars. And in this case, 3 bars also. And it will be the close of today higher than the close of yesterday. So the close of today higher than the close of yesterday 3 times in a row. And I will use, like I mentioned, I will use the S&P 500 because it tends to do extremely well with mean reversion strategies. We are using 1 contract per trade. And if we run the full backtest, as expected, the strategy does very well. 2009, 10, 11, we are in a drawdown. Also 2020, this is COVID. And this happens to all mean reversion strategies. In fact, if I extend this, I can make this clearer to you. So let's go for 7 days pullback, and we will exit after 7 closes. So we will go long when we have 7 lower close in a row, and we will exit when we have 7 higher close in a row. So we should expect definitely lower number of trades, and let's test. So we have only 3 trades and we are profitable. But here I will show you the problem. So these are the trades on the chart. And if we look at the first trade, this is easy. I mean, we are getting out, I don't know, within 20, 30 bars. But let's look at the next trade. Look at this. Look how long it took to exit. So we are in a big drawdown, but no 7 higher closes in a row happen. Let's look at the next trade. This even worse. Look at how long is this. So let's extend. So this trade took almost a year to find out 7 higher close. And look at this drawdown. This is a typical drawback for any mean reversion strategy, and you need to mitigate that. Now, beginner traders usually will jump to a stop loss. That is the wrong way to deal with any strategy. Stop loss usually hurt any strategy, especially mean reversion strategy. So the best way to deal with this is to have a fixed number of bars to exit the trade in case whatever your pattern, your indicator, whatever your condition is, doesn't happen. So in this case, since we are looking for 7 days, maybe if we limit 15 days, then we exit. Now, what if we want to test a different number? So for example, 1 bar or 2 bar, 3, 4, and what if we want to test a different exit? So we can randomize that very easy in StrategyQuant X. We just need to go to settings, switch the strategy to a template, and then we come here and we say instead of 3, generate randomly 1 to 5, step 1. And then we do the same for the exit, generate randomly 1 to 5, step 1. Now, 1 to 5, step 1, that means we have 5 steps here and 5 steps here. So 5 times 5, that should give us 25 strategies. So if I save this strategy and go to Builder, I can load it in the strategy from template. And it doesn't matter what you pick because the strategy template is already set. There is only an entry with a different number of close, lower than the previous close. And there is an exit, which is the close higher than the previous close, number of bars, 1 to 5. So that's it. We should get 25 strategies. Now, if you filter, then of course this will be reduced. But if you remove the filters, it should be maximum 25 strategies. And it should be very easy. And there it is, 25 strategies. Now you can sort by any metric you like. And StrategyQuant X have hundreds of them, and you can combine your own. So let's sort by return to drawdown. And here I have 12.7 return to drawdown. That's very good. And here it is 30 trades with an average about $3,000 per trade. And if we go down, I can pick something like this. This is 472 trades with an average of $200 per trade. Now remember, I didn't include the commission and slippage. So if we reduce $30 from this, it will be 177. So that's still an amazing strategy. So we can click on this and we can check the source code, go to pseudocode, and let's check. So this is the close lower than the previous close for 2 bars, and exit when the close is higher than the previous close for 1 bar. So that's why we have too many trades. Of course, here we have 1,000 trades. That must be 1 and 1, and it is. You can see here, close is lower than the previous close for 1 bar, and we exit when the close is higher than the previous close for 1 bar. The average here, it drops to 126. So obviously I'm going to go something like this. This looks like in between. So let's look at this strategy. It's not winning all years, and we can see the drawdown here. And of course, we can see this in the equity chart. This is the drawdown. We have another one here. But look at this. These numbers are really, really good. It's about 70% win rate, $200 average trade. Exposure is about 20%. So this strategy already beats many other strategies, and we didn't use anything. And this is the power of trading without indicators. Trading this pattern doesn't get any simpler than this. We didn't look at any chart. We have no indicators. We are just looking at the close, and not on 100 closes. We are looking on a 3-day pattern. We want 2 close down in a row, 1 close up. That's it. That's our entry and exit. We didn't filter with ATR, with moving averages, with Bollinger Bands, nothing. But that doesn't mean you cannot use that. In fact, the next step is to enhance this strategy with a filter like volatility or direction. And when you are using StrategyQuant X, that's extremely simple, yet so powerful. Let me show you. So going back to Algo Wizard, we are still in this template, and we just add another condition. We go to random condition. This random condition now will be picked up by the builder. And now I loaded my strategy with the template. But now remember, this condition will be picked up by the builder and filled with these building blocks. So we have in StrategyQuant X, we have many blocks. So these are signals, predefined conditions, indicators, and stop and limit entry blocks. And you can pick randomly, or if you can pick your own. Also, you can custom build your own blocks. So I'm not going to go over how you build your custom block in this video. And now because we have these building blocks, now we are not going to build 25 strategies, because each strategy now can be randomized with these filters. So now we need to use some kind of ranking. So let me use a simple one, net profit and number of trades. So minimum number of trades is 50, minimum net profit is 5,000. Of course, here you can add your own, and there are many metrics you can use, and you can use in sample, out of sample. But just to simplify, let's do this, and let's see what we get. So I'm looking for 1,000 strategy. I already have 911. These 911 passed my criteria. So now, again, let me sort by return to drawdown. And look at this strategy. It's 55, so not bad. The close is lower than the previous close for 3 bars in a row. And the close is higher than the previous close for 4 bars in a row. That's my entry, that's my exit. But now I have a filter. So for example, this one, the momentum is falling for 4 bars. Now let me look at another one. This is 249 trades. Obviously, this is statistically better. The average trade is 494. Again, very, very good. Let's click on this one. And this one, the close is lower than the previous close for 1 bar. And the exit, the close is higher than the previous close for 1 bar. So again, it's 1 bar and 1 bar. But remember, without the filters, we had about 1,000 trades. And now we have about half of that. And that is because this filter. So what is the filter? The open, the weekly open is falling for 3 bars. And that is the power of SQX, which is you can have thousands of building blocks, thousands of variation, and just use them as a filter for our simple entry and exit. And of course, here I have 911. Now you can change this completely. I can say, well, now I only want 100 trades. And instead of net profit, I will put a profit factor of 1.4. Let's clear all this. And let's start the process again. And theoretically now I should have a higher quality strategy. So return to drawdown. So now every strategy has more than 100 trades. And all of them have a profit factor above 1.4. And let me look at this one. This is 228 trades. Let's see. So again, the close lower than the previous close, 2 bars we enter, and close higher than the previous close, 2 bars we exit. But now our filter is a true range. That's a volatility filter. So true range is lower than the previous true range. That means the volatility is going down. So you see how StrategyQuant X is an amazing tool when you know what you are doing. We just pick a simple pattern, but because we have the automation and the building blocks in StrategyQuant X, that makes finding a robust strategy really, really easy. Of course, all that started with the knowledge that the S&P 500 is good with long mean reversion strategy. Because if you try this pattern on any market, it will not work, especially you guys in Forex trading. Forex is very, very dull. All the instruments have no characteristics. They are just basically noise until the government changes the interest rate and then the whatever currency starts moving in a direction related to that. While futures market usually perform really well with multiple patterns. To learn more, watch this video and I will see you there.